Many of you have asked me for an update on MPW stock. The stock is absolutely crazy. It's up 46%. 46% as the market's going down. Last year, the market was going up and the stock was down like 40 or 50%. I mean, the stock is out of this world. It's absolutely insane. So I'm going to do an update on it, let you guys know my opinion, if I believe the stock is getting close to overvalued territory or is it still a good opportunity, assess why the stock is moving up, and many different things. So I really hope you enjoy it as always. Now, I told you guys before, whenever a lot of you were posting comments about me picking weird stocks and then, that you lost money because of my videos on MPW or whatever. And I was trying to tell you guys that those stocks, they move with the 10-year. So they have an inverse correlation with the 10-year. This stock has a negative 80% inverse correlation with the 10-year yield, meaning as interest rates are coming down, the stock will be moving up. Why? Because it's a dividend company, so the dividend will look more attractive relative to the 10-year, but they also have a lot of debt. And as you can see from this chart, the white line is MPW. You could say the purple line is the 10-year yield. And as yields were going up, MPW was going down. Now yields are going down and MPW is going up. Negative 80% correlation. So this is one of the biggest reasons why MPW has been doing so well. But the company has also been, a little bit improving in general. But for the companies, they have 396 properties, mainly healthcare, medical facilities, and care centers kind of properties in over 9 different countries, 39,000 beds. It's a very diversified company. They had a lot of problems with a famous Steward Health, and Steward Health did go bankrupt. And I told you guys that was a good for the company because now they can start on a new page. They don't have any more, risks from Steward Health, and they did go under. But then another tenant went under very recently, which they filed for bankruptcy, and this is Prospect Medical. It's just one after the other. Now, Prospect Medical is only 4.8% of their assets. It's not as bad as Steward. Steward at one point was like 23% of their assets. Now Prospect's like 4.8%, and they're not collecting any rents. It's like 0%. So I don't believe it's as bad as people believe it is. Of course, it's bad, and they're trying to collect the properties, and then they're gonna sell them or lease them the same way they did with the Steward, and they lease them very quickly. They're gonna start collecting the rent mostly in 2026. So that has been going well for them. And, the company's been doing well. I mean, they've been diversifying. They've been selling a lot of assets to pay down the debt. The rent maturity, most of it doesn't expire before 2035. So they have, we could say 10 years plus runways in a lot of their rents. And they have a lot of visibility in their income as long as the tenants or the operators are good operators and they're willing to pay on time. They also still have a lot of debt left, over $8.9 billion. It was much, much more than that. They paid down a lot of it. They restructured some of it, but they still have $1.1 billion due this year. $2 billion due next year, $1.6 billion the year after. So that's why I told you guys before, I'm not expecting a dividend increase from the company because after they pay the dividend, they don't even have enough for them to pay down the debt. But they do have some very valuable assets, over $11 billion in net investments in real estate assets. And they've been taking advantage of them, selling them, raising cash and paying down the debt, restructuring the debt. So again, I would not expect any dividend increase anytime soon. But I do believe the dividend is safe. The dividend right now is 5.3%. 5.3% dividend, which is 8 cents per quarter. 8 cents per quarter is around 32 cents annualized. 32 cents in dividend, and they have their adjusted funds from operations per share at 47 cents. So they have a very good margin between AFFO per share and the dividend paid, which is around 32 cents, between 47 cents, and is expected to improve to 56 cents as they start collecting rents from the newly leased previous kind of Steward properties. So 2026 is going to look much better for them. So I believe the dividend, 5.1% dividend or 8 cents per quarter, is safe for now. I would not be expecting any dividend increase from the company in the near term, but I still believe the dividend is safe for now. Now, if we look at a very popular metric to value REITs or to value those stocks in general, is price to adjusted funds from operations, and this is the future funds from operation, which includes the increase. It's now trading almost 13 times price to AFFO per share, the mean was 11.6 times. So now the stock is starting to get expensive. It's trading well above the mean of 11.6 times. But my favorite way to value MPW has been on tangible book value per share. The current tangible book value per share, meaning you take all the hard assets, you take the debt out, and you don't include any intangibles or any goodwill, any kind of branding kind of value. You just take in if you kind of want to liquidate the company. You get $7.05 per share. The stock right now is still sitting well below liquidation value at $6.02 per share. So there's still over $1 left in value if they ever want to trade at 1 times tangible book value per share. But on a historical average, or I should say the mean, they have traded around 1.2 times price to tangible book. So if MPW currently trades at 1.2 times price to tangible book, MPW, in my opinion, would be worth around $8.80 per share. $8.80 per share at 1.2 times tangible book. This is over 45% on the upside. So there's still a lot of upside on MPW, not as much as when I was talking about it in the $4 range, $3 range. There's still a lot of upside. It's still a decent opportunity. But in my opinion, the risk reward over here, it's still great. But, a lot of other stocks are going down as well. And you have a lot of the big stocks, the quality names, Google and others. So I think there's a lot of different opportunities if you don't really want to be in MPW, especially if maybe we have a pickup in inflation and then the 10-year starts going up. If the 10-year yield starts going up, then MPW will start going down. And you're going to have the reverse effect, the same kind of effect you had last year as the 10-year was going up to 5.2%, and then MPW was going down as it was inversing the 10-year with a negative 82% correlation. So that's all I'm going to say about MPW. I still believe the stock is undervalued. I still believe the dividend is safe, but the risk reward from this price isn't as good as it was before. So that's all I'm going to say. Not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.